All right, so I'm just going to do a quick trend review of what happened here. So your market, it had supply come in over here. You could tell because of the big red. So, I mean, if it breaks cause all that, all those lows, right? Bing. And supply came and broke, gave confirmation. Then it doesn't, you still have to take a look at context and all these things just to see if it's not in the trading range. You have a lot of fake signals. So over here, it's very obvious that, that the market was at this top. It tested the top, and then the supply came in and confirmed. And then what happened? Obviously, it tested again and it continued to go down. But fine, like, all right, you got, this is one move. Here, we'll see how to catch the turning point. And you'll see all the time when you have these areas, there's always high volume. There's always high volume and some type of range switch. If it's not on the downside, it'll be on the upside. If it's not on the upside, it'll be on the downside. I mean, and there's a big move up. That's typically it. So, and then you just have to see if it's at levels and things like that, at the important levels where, it should turn. Anyway, the market was going down. This right here was preliminary demand, right here. It had cause in the background, but a lot of times when you have preliminary demand, there's one final climax or shakeout, and then demand comes back in. So it's not easy to identify preliminary demand to see if it's going to work or not. How you know here that you should not get in is, first of all, you just had supply in the background. If you have supply that close in the background, chances are the demand might just be one quick rally to test. All right, so that's one way. The second thing to look at is it making a higher high? It goes up, test, up, all the way low here where buyers defend, and then it just goes here, but it does not break through and make a higher high. So if demand comes in and it's not making higher high, it has not established trend. You could have demand, but you don't have a higher high. So in trend, you need higher high and higher low. So how can, you don't get in because trend hasn't been confirmed. So it needs to have a clean higher high for someone to make the inference that, yeah, trend established, even though demand comes in. Why? Because that demand without the higher high confirmation, it's not trend because you don't have a higher high. B, it could be short covering, and C, it could be preliminary demand. In this case, or it could be this some other thing. So over here you had supply, so demand here is just testing the breakdown. In this area, there's a breakdown. You're just testing it. Anyway, so as it breaks and goes here, now here's what's interesting. As it comes down here, you have the biggest volume there is. I mean, the biggest volume period. All right. And you have high volume in the background. So my interpretation of this is the climax, then you have some type of test. The test does not pass, in my opinion, on this down wave. But it does on the subsequent down waves, where supply just diminished, totally diminished. It diminished here where it's only 26, 34, and 55. It's nothing compared to 162. So, the biggest one is right here, and it's less than a third. It's about a third of the up wave. So, I mean, the logic here is that this right here is buying, but you don't know until higher highs have been made and the selling is gone. Like, do you see any selling here? 20, look, it goes from 111, It goes from 170 to 111, then you have 26, 34, and 55. It's nothing. So, and even that 55 was in the course of 3 bricks. So there's no supply there. And all it did was spring. So the other minutia, the clues, is right here. This gets me excited. Because smart money, they know where to buy and sell. So what you see is they're gonna buy low and they sell high. They know how to do that, and they will turn the market. So when I see this move up, I'm like, it has a lot of volume. It's the biggest volume. It is the biggest volume. But still the trend is down and I'm not really sure. But when I see that it's a lot of volume and it has big volume, the chances are that the demand is in. So I mean that really is it. Like over here you have heavy demand on the wave, then you have heavy demand in the wave. It's not only because there's a lot of bricks, it's also because it is buying. For example, this brick has the most volume in the whole trend. This whole trend. This brick had, I don't know how much it had, but damn it had a lot. It's the 87. Let me see if I can find anything bigger than 87. There's nothing in the whole trend. In the whole trend, all these bricks, this has the most amount of volume. I mean, once you have that information, wouldn't you say that this is demand coming in? It's a no-brainer. Over here, you had preliminary demand, and you had some good volume, but it wasn't the highest. For example, here you have 32 and 32, but in the close background right here, you have 40. See? Right there is 40. So over here, you have 32. 32 is high, relatively speaking, right? Maybe bigger. It is high, but it's not exceptional. Here, the volume of the wave and the volume of the brick is very clearly telling you that there's extremely heavy demand, and the chances of that demand being taken out, well, is not that much, and this is why you do not see this area breaking. You see this brick? When they try to go, defend it. Try to go again, defend it. Third time, defend it. This brick with all this volume is defended once, twice, 3 times. Why? Because defending the position cannot go lower. Period. Done. Finished. So that's how you know. And the supply is also like, it's just diminishing, big volume, big whatever. After that, it did this. Once it makes this clean higher high, I can see now clearly that really this was a resistance area, right? The top, up, down, come back, spring, and breakout. That this makes the range. And what you had here is actually a springboard. So it's a different types like this. It's a springboard type formation. Ding. This spring, high, low, all that. So I don't really care for patterns, but I mean, springboard looks like a spring. Excuse me, springboard looks like a springboard. There's nothing more to say. And then it launches. Now it's gonna go higher. So here also very interesting. Look at how much volume accumulated right there. See? Here and here. So They tried to go down, reverse, went up. This is a very important area. Chances are when market comes back down here, it's going to bounce because there's a lot of volume here, and attempted to go down, failed to go down, and it's going up, taking out these highs. That means qualifies as a breakout, etc. Anyway, so long story short, what are the key takeaways? Well, when you have a change of behavior, don't just say, oh, it's a change of behavior. Look inside it to see if there's actual heavy demand within the change of behavior or sign of strength, and which bars have that. And once you see it being defended once, twice, three times, that means they're defending the position, and it rallies up to give you a confirmation higher high. So that's really important. Besides that, what else is important? The heavy selling in the background with a very minor correction and then continues lower. Typically, that qualifies as your selling climax, right? So that's really important. You want to know where your resistance areas are, because those need to be taken out, and they are taken out. And that's all, folks. So this is a trend review of this uptrend, which had heavy buying inside the change of behavior or sign of strength, along with defending that area, that level, that brick, that bar once, twice, three times. Looking for those tests is very important because it shows the market's inability to break through. All right. Instead, it springs and makes a higher high. What makes this spring a good spring is because it's confirmed by a higher high, or it's confirmed by demand. If it's not confirmed by demand, it could just be a low and another lower low is about to come and all that. But this attempt to spring is followed by demand, making the ease of movement to the upside. Why? Because they tried to go down and failed. So, and that failure was confirmed by strength in the other direction, which is telling you that market can't go down, or it's not able to go down. It's not able to go down, confirmed by the ease of movement to the upside here, the demand. All right, thanks, bye.